this computer. Okay. Welcome, everybody. A new week in the new normal. And today we are blessed to be joined by Reuben Mann. I'll let Reuben go into a little bit more of a intro for himself, but I'll just tell you that I've been a client of Reuben's company, taxinhouse.com, as our MREA bookkeeper for the last year, and it has really made my life a lot easier from a P&L perspective and making sure that we're all good. And if anything, and I'm sure we'll talk about this a little bit, you know, this last week has proven exactly how important it is to have a P&L, as now that is so important to part of the stimulus package, you know, to get things ready for it. So thank you, Reuben, for joining us.
Yeah.
And I will turn it over to you. Tell us a little bit about you and what you do, and we'll go from there.
Sure. All right. Well, glad to be here. Welcome everybody. Hope everyone's staying safe. So my name's Reuben Mann, and I run a company called Tax In-House. And what we do is help real estate agents understand their numbers. So it's very much a financial education focus of really trying to make the numbers make sense. Now, as part of our service, we are putting together MREA-based P&Ls. MREA-based, just recognizing that real estate's a little bit unique and you need a slightly expanded picture. But sort of to Sandy's point, you know, our goal is much less the product we provide anybody, but really that you can pull the data out that you need at will. So for me, for example, with the Paycheck Protection Program loan, I was probably done in 5 minutes because I knew where I needed to go. I knew what they were asking for, and it was all basically pre-assembled. So I just went, printed the reports they wanted, and I was done. And it's really, you know, that's my goal for everybody. So before we jump into anything to do with this stimulus package, you know, I always like to just touch on what is your one thing when it comes to tax and bookkeeping to make sure that everything else is easier or you don't even need to do it. And the reality is it's really actually very simple. You need to have separate accounts for your business, and you need to use those accounts for all your business expenses and only business expenses. And that's really it. If you can do that one thing, your bank and credit card statements will become a record of all of your expenditures. And the thing about business taxes and sort of business in general is, per the IRS, every single time you swipe your debit card or you write a check, it's open for interpretation whether that was a business expense. They define it so ambiguously that, you know, I'm an attorney, and for me, how they define it, I like to say I can come up with an argument for both sides, both it being a business expense and not. And the only difference, I can do it for everything in the universe. And the only difference is the strength of my argument. So if that's the case, and it's overlaid with the fact that the IRS accepts anything you say up until the point that an audit happens, which is them just saying, hey, show us how you got to these numbers. You know, it means your best friend is organization. And in dealing with the IRS, if they say, how did you come up with these numbers? And you can show a tax return that matches P&Ls, that matches bank and credit card statements, you're in such good shape that you really, you know, for all intents and purposes, you're just going to focus on real estate and keep moving on because that's a non-issue. So anyhow, like I said, I always like to throw it out because it's the foundational part for any education. You have to have accurate numbers. And from there, it becomes valuable because, again, the part of understanding your numbers is really that side of turning 180 degrees. So instead of it being information that is telling a story that already happened, which is really what a P&L is. You know, we're doing our March P&Ls because we're here in April and the March is over. But March is over, so how are you going to change it? You can't. It's over. So what you can change is the future. So the value in the P&Ls is sort of turning 180 degrees and having, if you have some basis for what you expect to see happen, and then you get a P&L that tells you what actually happened, it's the comparison between those two that really allows you to get dialed into why you think you're spending the money you spend. And it's going to be different for every one of you. But the reality is, you're making that decision, if not consciously, subconsciously, every time you swipe a credit card. We're just trying to help people get more just very conscious in those spending decisions, and ideally able to articulate the ROI, the expectations that they get. Because if you can do that, you can put it into a form, budget/forecast, which is really just saying, this is what my future P&L is going to look like. And if you know that, and then you get a P&L that says what actually happened, well, now you have both pieces to be able to do the analysis of, did my expectations get met? And it really is the place where you get your business dialed in, because it is different than everybody else's. So I actually just did a video this morning that I haven't sent out. So it may go out, but the video is talking about this stimulus package, which I'm going to jump into in a minute. But really the government, it's unprecedented, right? In that our economy is shut down. And the government is trying to recognize, because if you're a small like restaurant or retail shop, you are in a terrible, terrible spot, because you're reliant on, next weekend's cash flow to cover all your bills. And if it's not there, then you're in a really bad shape. Hopefully most real estate agents are a little better prepared to at least handle shorter term gaps in their income, just because it's the nature of the business. But now with the Paycheck Protection Program, which is applicable to really most real estate agents, it creates sort of a financial assist to help tide people over to when things are cranking again. And I think if you sort of take that sort of all those components and say, okay, humanity is going through a shared challenge where we're more or less locked at home. I'm going to be okay on the other side, because the government's going to help get me through with these programs. And if those are both true statements, then it means this fact that you're locked at your house, while not a choice, I look at it as a gift. For me, this is a gift. If I get all this time with my family, I get all this time to really focus on my business and make sure it's so dialed in, because I tell you, I'm going to come so roaring out of the other side of this thing, because we're doing all the stress of the systems right now and making sure everything works and that we're in place. So I think it's a time where everybody has a get out of jail card free for kind of a woe is me attitude, because the world is shut down. It's legit. No one's going to give you at all a hard time for that. But the reality is it is shared, and how are you going to react? And I just think in that sense, it presents such an opportunity for everybody. But anyhow, jumping over to the Paycheck Protection Program.
Before you jump into that, do you mind if
Sure.
I just ask you, we had one question in the group chat that I wanted to
absolutely.
just check. Winnie was asking, do you need to have an LLC or something like that in order to get a business account, or will a separate personal checking work?
Sure. So the separate account is regardless of whether you're set up as an LLC or just a sole proprietor using personal accounts. So it's totally fine to use personal accounts. The key part of that is the exclusivity of use. It's essentially saying these accounts are only business, but also all my business. Because what you're really after, like for Sandy, we're a third-party bookkeeper. So we're just looking at a list of transactions and going, I'm Sandy, I just went and spent money at Costco or on Zillow or whatever the case may be, and coming up with where would this go. And it's going to be a bit of a judgment call, but it's a much easier judgment call to make when the starting point is, I know it's business, not the first step being like, well, was this personal or was it business? And then getting into the analysis.
Correct. And I'll just add to that I have a business credit card that's truly a business one, but I also have a personal card that I only will use for business stuff. So that way there's never any kind of worry about commingling or worry about, do I count this in here or that? It's completely separate.
Which is perfect. And again, the number of accounts doesn't matter. And again, when you start talking about getting an LLC, really you're getting into different issues. I'm a huge proponent of LLCs because it separates risk, although for real estate, that's relatively low. I'm a huge proponent from the mindset side of separating your business in a legal sense. Because if you get to a 7th level business and you want to sell it, you don't want it at all tied to you personally. You want it to be its own thing, that there it goes. So I like LLCs for that reason. And then because I always assume anybody I'm talking to is going to be very successful at real estate, then an LLC, you can do stuff tax-wise when you start making certain amounts of profit that just become advantageous to you. So it's one that doesn't, an LLC at default is considered, for tax purposes, a pass-through entity. So if you create an LLC today, assuming your real estate commission allows it, there's no, it doesn't change anything tax-wise. So that's one of the reasons I'm a huge proponent, because you can get in the habit, you set up the accounts, you do everything, and if it makes sense down the road to change how it's done taxes, you can, but just creating it today doesn't force you into doing any of those things.
Makes perfect sense. One other question about this stuff, and then I definitely want to jump into
Sure.
the PPP. Peter Charles was asking, is there a benefit to an S Corp versus LLC in terms of paying self-salary, et cetera, et cetera? Obviously, that's a big question.
Yeah, that's a big one. So I mean, the short answer is, if you're a successful real estate agent, an S Corp is almost always going to make sense for you, virtually 100% of the time. You know, with the change in the tax law, a C Corp, which was 100% never going to be something a real estate agent would use. Now, there's limited situations where it might come into play, but by and large, if you're a real estate agent, an S Corp is going to be your best entity, your best tax structure. So it's an LLC typically is the entity that's created at the state level. It's only the IRS that now, instead of saying we're disregarding that LLC, now they're saying we're viewing it as an S Corp. And here's really the difference, and this is where the monetary savings comes in. If you're a Schedule C business, meaning you file your real estate taxes as part of your personal tax return, it's your income, your 1099, less your expenses. In my example, these would be straight off your bank and credit card statements, equals your profit, whatever's left over. And that profit, once it's determined, once it's fixed, is going to be subject to self-employment tax of 15.3%. On the first 135,000 or so, and then it's 2.9% thereafter. But as soon as profit is fixed, self-employment tax is fixed. Now that income then goes to the front of your tax return, and you pay income tax on it as well. Now, income tax might get reduced because that's the aggregate of all your income from all sources. It can be affected if you're married, those things. So that number can fluctuate, and it might even go to zero. But self-employment tax, the moment it's determined on your Schedule C, the tax is due. So if you're now an S Corp, the two major changes are, it's almost as if that that Schedule C was taken off the personal return and filed by itself. So the first major change is you're now filing your business taxes by themselves. Now, it's only an informational return, so you're just telling the story of what happened, but it's filed by itself. Here, so right now there's no difference to the Schedule C other than you file it separately. Still, your 1099 is your income. The expenses haven't changed. The next sort of major difference is you, as an owner officer in this S Corp, have to claim a quote unquote reasonable salary. Now, you ask 100 tax preparers, you're going to get 100 different answers about what that reasonable salary is. But what happens is that reasonable salary is now going to be paid out in the form of wages to you, which now reduces the profit of the business by an equal amount. So if previously you were showing $100,000 in profit, it would have been subject to $15,300 in self-employment tax, right? 15.3%. That business is now an S Corp. We're still showing $100,000, except now you're an employee of the business. And hypothetically, say you claim $60,000 in salary. So now the business has a new expense of $60,000, so it would only be showing $40,000 in profit as opposed to $100,000 like it was before. So on your personal return now, you're getting a W-2 because those wages were paid to you. So you get a W-2 for $60,000, and the K-1, the tax document produced as part of that S Corp tax return, it allocates all of the profit to the owners of the S Corp according to their ownership percentage. So in my example, if you're a 100% owner, all 40% or all 40,000, 100% gets allocated to me via a K-1, and I'm going to have to pay taxes on it on my personal tax return. So if I'm looking at my personal tax return, I have a K-1 for 40,000 and a W-2 for 60. 100,000, just like I was before. Thus, my income tax hasn't changed any. It's exactly like it was before. Here's where the tax savings comes in. Self-employment tax has now gone away. It doesn't exist because you're not self-employed. And your S Corp, because it's paying wages, it's going to have to pay payroll tax on those wages of 7.65%. And you as the employee are going to have payroll taxes withheld from those wages as well, also 7.65%. So we add those two amounts together. What are we at? 15.3%. Payroll taxes and self-employment tax is essentially the same thing. It's saying you're the employee and the employer, so you need to pay both shares. But with the S Corp, you're now only paying payroll tax, and you're doing it on just the wages. The $40,000 is considered passive income to you and not subject to the payroll tax. So these two examples side by side. Sorry, I have a bunch of kids going by right now because we're at homestay. But it's side by side. The Schedule C business paid $15,300 in self-employment tax, and the S Corp paid 15.3% on $60,000 in wages, or ballpark 9,000. So exactly the same businesses.
Right.
One paid 15,000 in self-employment, the other one paid 9,000 in payroll tax. Everything else was the same. So people would often say, "Oh, well, I'm going to be an S Corp today." That absolutely makes sense. Now, what I like to say is the salary needs to be paid first. So if you think of the salary as being taxed exactly the same as wages, then there's no benefit to, exactly the same as Schedule C, because it's going to pay payroll tax plus income tax. If they're thought of as exactly the same, then there's no tax advantage to paying yourself wages compared to a Schedule C. So then you don't want to do it until there's enough profit that you're starting to see a savings. And the ballpark number I throw out for people is about 60,000 in profit, not revenue, but profit. That's a total approximation. But that number is essentially saying, let's say you're a relatively new agent, you take a salary of say 50,000, which is about, some of the factors in determining what is a reasonable salary. It's something that's only determined in tax court, litigated. But the seminal cases are sort of saying it's about the industry you're in, how long you've been in it, what your role is, what you pay your assistants. And the commonality across all tax in-house clients are real estate agents and the real estate industry. And the average salaries are pretty darn low. Say about 30,000. You can take all the part-timers out there, 30,000 or so. So claiming 50,000, really that person could probably, if they're a newer agent, could probably claim 30 and have a pretty good argument that it's reasonable. But if they claimed 50 and they had 60,000 in profits, on an S Corp, they would now have 50,000 in wages and 10,000 in profit, saving themselves 1,500 in self-employment tax, which would be about enough that should cover the cost of having to do payroll tax returns and having to do a separate new S Corp tax return. So at 60 grand in profit, it's kind of a wash. And above that, you start saving money, and the savings go up the more you make.
So I'll just point out, this is exactly why I hire people like Reuben and other folks, because most of these, even he did an amazing job of describing it all. Half of it went over my head. So that's why I let them do it and figure it out for me. With obviously in conjunction with me. But that's great. Thank you. Why don't we jump in a little bit into the PPP stuff and
sure.
EIDL?
So the PPP program, is new legislation as of about 10 days ago, and details are coming out by the day. It's changed pretty radically even from like last week to today of sort of how they're looking at it. But in essence, the government recognized they've stopped the economy and they're trying to tide over businesses that have employees that aren't going to lay them off, or are trying to encourage them not to lay them off. So that's what this program is trying to accomplish. Now, it's instituted, it's a program that's going to be run sort of via private banks. So it's 100%, sort of when you go to inquire about this, you're really going to be inquiring with your lender, because how the program works is first, it's a loan from a private bank to your company backed by the SBA. And how they're calculating the loan is one of the things that is changing rapidly. You know, initially 1099 payments were included. It looks like they're saying no because those businesses technically can file for themselves. So it'd be a little bit double dipping. So they're not saying that now. But basically, talk to your bank because they're going to say, here's all the things we need. But really what it's looking at is the wages you paid in the prior year. It's very easy for a business like Tax In-House where all of our stuff is wages. You know, all I had to go and look at was how much wages we paid last year, what that worked out to for a monthly amount, and then the loan amount that was authorized is 2.5 times that amount. So if you're now this program is open for Schedule C businesses, for sole proprietors. So it's going to be looking, they cap it at 100,000 in earnings, but they're sort of looking at how much money you made. I presume this is going to be on your 2018, based on 2018, but I can't answer that question. But it's essentially looking at the money you paid yourself, and it's going to allow you to get a loan based on that amount. And here's the beautiful thing about this. You know, a loan, you might go, well, you know, I don't want to borrow money. Time is tight. But if the proceeds of this loan are used on wages, payroll, on utilities, and on rent, then after a 60-day period, you can petition, and all of the expenses that were spent on those items, or all of the money that was spent on those items, will be forgiven from the loan. And it's not even a situation that it's forgiven. Typically in a tax setting, when debt is forgiven, you owe tax on that. They treat it like it was income to you. In this case, there's not going to be tax owed. It's just essentially money to tide you over. So it's a really amazing program because it's so much money. They're making it's available to so many small business owners, and it's being rolled out so incredibly fast. You know, for most sole proprietors, they're going to start accepting applications this coming Friday. If you're an S Corp or what do they call it? Self-employed, which I get sole proprietor and self-employed is a pretty fine line. Applications, they started taking them on this past Friday. But it's a program, talk to your lender, because again, most of you likely apply and you want to figure out exactly what they're going to need to calculate how much they can loan you. And then if you take advantage of this program, my recommendation is take very detailed notes of all the payments you're making, because the reality is this money can, or this loan debt can be waived 60 days from now. And that's not going to be enough time for there to be tax documents to prove you paid your employees or to pay your rent payments or whatever it is. So it's, again, it's going to be your lender that's actually the one that's going to say, yes, you spent this money on qualified expenses, therefore we're going to get this waived. So it's one that you just want to make their job as easy as possible. You know, give them everything they need. Now, if you have separate accounts, it's going to be pretty darn easy. You'll just flag the right ones or the categories. But again, just take even better notes than you typically do, or better records than you typically might, just because you don't have the time to wait for tax documents. It's going to be sort of informal documents, if you will.
Makes sense. A couple of questions while we're,
Sure.
Since many of the people on the call are independent contractors, 1099 employee, you know, from the brokerage, where do they fall within those distinctions of self-employed?
So, yeah, I sort of would personally, you know, I think self-employed is I think sole proprietor is their first language. Sole proprietor is one that I would sort of look at. You're still a Schedule C, but you have employees. It's a little bit of a, and again, don't quote me on my sole proprietor self-employed. It'll make sense when you look at the application, but I don't have it totally straight in my head right now. But then self-employed, I view more as, you know, really your more typical single agent. They're filing on a Schedule C. It's just them. They probably use a transaction coordinator. They might have a chunk of contract labor. They probably don't have an employee yet. But, you know, it's one that, again, that's where banks will be a good resource in this, just because they're going to be taking applications and they can say specifically for those items. Makes
sense. The other question that keeps coming up with people that I've been talking to is, for those independent agents, it's, I mean, there seems to be an opportunity for them to collect unemployment insurance if they can
Yeah,
get through. How
yeah.
does that balance out with some of these other things that we're talking about?
You know, so as it ties to the self-employed specifically, or a single agent, you know, it sure looks like a situation where you could double dip, right? And honestly, I don't have a great answer for you because from my perspective, it absolutely looks like one that you could take advantage of both programs. And like the premise, you know, for tax in-house, we're taking these wages to keep people employed. Um, so that makes sense that then they would not be claiming unemployment. But in the sense, if you're a sole proprietor and you're getting paid, especially if it's off your Schedule C, which is like the profit that went to you, they're compensating you for your time, which is exactly what unemployment would be doing the same of. And programs are pretty loath to ever allow double dipping. But that said, you know, this is an extraordinary program in an extraordinary time. And the details are just not so hashed out that it might be one of those things that it hasn't yet been addressed.
Right.
So it's one where, you know, all of the unemployment programs are going to be, you know, those are facilitated or managed through the state Department of Labor. So it'd be, you know, the New York Department of Labor, which is going to be a different party than that's facilitating this other loan, which is part of your business. So it's one that, you know, I wouldn't be surprised if in the unemployment application that it's going to require you to vouch something along the lines of, I'm not receiving any other money. Or if you are, then it would, I can almost guarantee what it is. It'll just be a dollar for dollar offset. So one where that agent would be well served to look at both programs. And maybe even, you know, honestly, you probably don't want to do both if one's just going to offset the other and there's no advantage. But sort of to take a look at both. And because with the unemployment program, you know, as I understand it for gig workers, the gist of it's taking 50% of the state's maximum. So like Georgia's maximum is 320 a week. You know, I bet you New York's more like 600 or something, but it's a pretty low amount. But you take half and you're at 300. So you're like, that's not very much. But as part of the stimulus package, the government is throwing an automatic 600 a week on top of whatever the state comes up with. So all of a sudden in New York, it's 900 a week, you know, 3,600 a month. That might be more beneficial than the other program, depending. And it's not one where you have to qualify for that 600. It's like, oh, you're unemployed. Here you go. You get it. Whereas the other one is looking at past documents to calculate your amount.
Right. Makes sense. Before I jump into, there's a bunch of questions in the chat, but before I jump in there, one last thing. EIDL, how is that different, or how does that work in conjunction with PPP?
Yeah, so in conjunction, it is different. It's an emergency economic economic injury disaster loan or something along those lines. And it's one that's supposed to be able to get the money out a lot quicker. You know, in regards to PPP, any proceeds you'd get from PPP would be offset by any amount you got on that. And I think they're like added on top. I only say that because that's how the application I filled out, they had written it like it was one on top of the other, which might not actually be the case. They may be independent. But again, you won't get, if your PPP loan proceeds were approved for say 100,000 and you had taken a $10,000 economic injury disaster loan, you're only getting 90,000 from the PPL. You're not getting 110. Gotcha. Now, as far as all of those independent, the single agents we were talking about, you know, I haven't done a whole lot of research into that economic disaster loan, and its criteria for calculating it is a little more from the appearance that your revenue went down and you're suffering from it. And it is one that is written as a grant. So if you get approved for it and you don't pay it back, it's going to be yours. So there is an area that I would say, because all of you sort of fit that general criteria, you know, your revenue has gone down. Now you can split hairs of, oh, I actually didn't have any closings, you know, on the books or not, but, you know, whether or not that comes up is presumably going to be on whoever's approving or not approving the loan. But it probably is one that's worth going through to apply, because the general scenario fits, and again, if it's approved, it's money that you don't have to pay back.
Right.
It would be beneficial,
Okay.
presumably.
Cool. Fingers crossed. All right, so a couple of questions here. First from Bill. Is there any differences for married couples who are both 1099s that have been filing together?
This is as far as S Corp versus sole proprietor.
Yeah.
So, short answer is no. The analysis is still going to be the same, although now you have two people. I think you get to, you certainly get to that 60,000 amount quicker. Where the married couple gets, I wouldn't even call it more complicated. The S Corp, the analysis for the S Corp is no different. So you're going to look at those combined amounts to decide if it makes sense. The place where it gets slightly more complicated is that reasonable salary determination. Because I don't want to go too complicated into it, but the reality of all business expenses, because it's so ambiguous, that you totally are the person that gets to decide whether it's a business expense or not. Now, the IRS might come back later and say, we disagree, but on the front end, you're always deciding, and same in reasonable salary. So you could always make the argument, because there's no black and white rule. It's not like you're speeding. If you go over 55, you're over 55. It's all gray. It's go a reasonable speed. And there's a scenario with a reasonable salary that you might go, I think I'm going to do 10,000 is reasonable. Because that way you're only paying a minimal amount of payroll tax and you have a much bigger savings. The reality is, I'm not here to make that call. If you can go through your judgment and rationalize the 10,000, I'll tell you what my opinion is and how I view it and what the IRS courts have said, but you at the end of the day get to make the call. So when it comes to married filing joint couples, because all of the income is going on one personal tax return, that's not going to change. You do see them sometimes just fluctuate with, one of them will claim the salary as opposed to both, or they both claim it a little bit smaller, or things like that to try to minimize some of those payroll taxes, even though you're really saying there's two officers, not one.
Makes sense. All right. Seth asks, do you know if that will be valid? I'm assuming some of the PPP valid for new hires. So similar, like for example, I had two people that I hired in 2020. Mm-hmm. Are those going to get counted in?
Sure. So they're definitely counted as far as the expenses to calculate for payback purposes, or spending the proceeds on the wages and the utilities and the rent. Now, whether they count for, clearly they're not going to be a factor in your 2019 payroll, so it's not going to factor in calculating the loan if you're going via that route. Now, I do believe there's that some banks are accepting, because for new businesses, they're accepting like 2020 data. So I suspect if 2019 is like so out of whack, say you had 0 in 2019 and now you have 2, in that scenario, again, this program is to save business. They want you to keep those people employed. So without saying 100%, I strongly believe it's going to be one that they're going to say, okay, you can alternatively calculate it based on this 2020 stuff, which is, because again, the payback is still, did you spend this on wages, rent, or utilities? So sorry not to give you a better answer, but
yeah. If I remember correctly, there also is a cutoff date. I think it was late February.
Maybe the 15th, or maybe even all of February. It might have been taking the 2 months.
Yeah.
But again, it's one where your lender, when you're going through, if you say, hey, that exact thing, my wages are much higher in 2020 than they were in 2019, they'll let you know, oh, well, we can take this as in lieu of your 2019 data.
Gotcha. Okay. So Allison is asking, do you still pay the interest on the PPP loan? Only if it's waived, right?
Yeah, I mean, again, the interest I want to say is 1%, so it's going to be a really small amount, because we're talking 60 days before you would go and get waiver. And I'm pretty sure if it all goes towards these expenses, that interest is waived as well. But if you don't incur enough expenses to pay back or to sort of spend all of the loan proceeds you got, then it's a loan. And at that point, the terms are incredibly reasonable. I want to say it's a 2-year loan at 1%, but it is still a loan and there would be interest.
Right.
In some respects, it feels, I don't know if you're familiar with the movie Brewster's Million, but it a little bit has that sort of feel of like people are trying to borrow as much as they can and then make sure they spend it all on these legit things. Because if you don't, you pay tax on it, or it's owed.
That makes sense. Okay, Irene is asking, can the payroll expense be the money you pay yourself? Which I believe is...
So as an S Corp, the answer is yes. And as a sole proprietor, it has to be, right? It has to be. Because if they're calculating it on how much profit you got and profit money you paid to yourself, then that's it's got to be okay. But I haven't looked at that sole proprietor specific application enough to tell you 100%, but it's the only thing that makes sense.
Okay, makes sense. Another question from Irene. If I pay rent to myself for space occupied, is this an expense that can be waived?
Well, so one of the things you want to remember is that the waiver is going to be determined by your banker. So it's one where, like, I too pay tax, or I have a separate entity that owns the office building. So for me, the rent, now frankly, it's with the same bank, and they have accepted those rent payments going to a different company. They are legally distinct, but at the end, the beneficial owner is the same. So in that case, the answer is yes. So it's an answer that ultimately, I think that if you have your property owned in a separate entity, it's going to make it a lot easier, but it's really a question for the banker of saying, hey, these are the rent. And I think if it's legit rent, then yes, it should be deducted. Again, this is really a program. There's a lot of judgment on the bankers, but remember, it was only implemented 10 days ago and it's changing so much. So it's this program that it's not ever going to be totally buttoned up at 100% of these answers. It's always going to be sort of room for interpretation. And a lot of it is, if your banker approves and gets your loan waived, then that's really all that matters. And if it turns out that interpretation was slightly, off, if it's waived, it's waived. And at that point, you're in good shape. So it's one that my recommendation, again, is to talk to them during the application process, but also say, hey, I want to make sure that I give you everything you need to waive this right immediately. So can you tell me all of those things you're going to need too, so that you can say, well, this looks like a payment to me, but it's my rent, and you'll see it on the tax returns and blah, blah, blah. And if you can, again, I suspect, show them this is rent, and they say, yeah, I feel good that that's rent, then it fits within their criteria for having it waived.
I believe, and Irene can correct me if I'm wrong, I believe part of the question was also asking on like a home office deduction type rent.
Oh, yeah, if it's from the S Corp to the individual, maybe. I can't answer that question.
Yeah,
no.
I mean, again, I'm not an accountant or anything like that. I would assume that you would have had to have shown that you were taking that kind of deduction in previous years.
Yeah, and I think it goes a little bit to, if they're going to, like, I could imagine them wanting to see a Schedule C. That would make a lot of sense. And if they're looking at a Schedule C, they're going to see what you claimed for a home office. So again, it's going to fit in, and they might say, yes, we accept that line item plus this line item plus this one in determining how much you're sort of, what we're going to waive. Again, the rent and the utilities are calculated or counting towards getting the loan proceeds waived or forgiven, but they don't count in counting how much you're able to borrow.
Right. Okay. Okay, from Seth, an agent with an S Corp paying themselves and issuing a W-2 is potentially claiming unemployment based on the W-2 income? I'm not sure I understand the question.
Well, so that person potentially could file for unemployment if they weren't working. They would run into the same issue where, in all likelihood, the PPP program is going to provide significantly enough money that it would offset anything, any sort of those unemployment proceeds. And if the unemployment, I want to say unemployment, it's like, it's a dollar for dollar offset over $50 or something like that. So it would be very quick that unemployment, you just wouldn't be eligible for any of unemployment. So again, the programs really are going to very much be designed to avoid double dipping as much as possible. I want to warn you, my phone looks like the battery's running a little low. So if I all of a sudden disappear, I apologize.
Okay.
I think Ashley might be on this call, Ashley Nagy, and you could put her on the spot and have her answer some questions too.
Okay, sounds good. We'll try and get a couple more of these in before you jump off. So Irene is asking, do you call the bank first and then apply online? Or do you?
Look, I would go to their website because I'm sure they're getting inundated with calls and you might get all your questions answered right there just looking on the website. You know, I just say the lender because, again, because they're the gatekeepers, you know, if you have a personal relationship with any of them, it's just going to serve you well because they're going to be able to help navigate you through what's going on.
Right, right. And then we had an earlier question about what with new agents. I'm assuming she's talking about agents that don't really have a history yet of income from their new businesses.
I suspect unemployment will be the most lucrative route in that case.
That makes sense. Okay. And let's see, the last question just was a follow-up from Seth saying that his offer letter is for April 15th to a new hire. I can't imagine that that's going to be counted, but.
So it would count towards the paying, you know, the paying money towards wages, rent, and utilities. It wouldn't count in the calculations. But these things are tied to making sure there's not wage loss. So like, let's say had 3 employees in February, laid one of them off in the beginning of March, and then hired this new person. For the calculation purposes, he didn't lay anybody off. He's going to get the full credit. Whereas if you laid the one person off and now you only had 1 instead of 2, you might not be eligible for the full amount.
Gotcha. It's saying your network bandwidth is low, so I'm assuming you're about to disappear on us. So thank you. Thank you so much for.
Yeah, absolutely. And certainly, yeah, if anybody has questions, Sandy, by all means, feel free to sort of reach out to our office. They can send us emails, always easiest for us, but certainly, you know, however, we're happy to help make sure people are pointed in the right direction because, again, I can't stress enough, you know, please, if you take anything away, do the separate accounts. It's like my one wish. But if anything else, to really just to reflect that we've all been given a gift. And certainly when it comes to our businesses, what an amazing time to work on our business and just make sure it's totally buttoned up and make sure that you're the agent that comes roaring out of the other side, that you take market share right now as opposed to give it up. Because, you know, there's a lot of people that have given up and there's, you know, we're all in this together. We're all in the same boat and there's no reason for it. You know, we can all, there's plenty of action.
Thank you. Which is the best email for people to reach out on?
That's a good question. I
was about to type yours in.
Yeah, you can go with rmann@taxtonhouse. That's fine.
Okay. All right, I just put that into the chat. So.
Okay, perfect. Well, like I said, we're happy to answer questions. You know, what do they say? A rising tide lifts all boats. Yeah. And even when the tide's going down, like it sort of arguably is right now, you know, it's all perspective. So, you know, maybe it's actually not.
Well, I do have one last question before you go. Just
sure.
I've been curious about this myself. We'll see if we can get it in. How did you get involved with KW so intimately, so that you're such an MREA guy?
Well, so I came from law. As I said, I was an attorney helping small businesses and helping them. You know, I was coming saying, run this like a business. But I didn't like law because it's primarily an hourly sort of business model. It's based off an hour of your wages or your labor or somebody else's, which just doesn't work for how I think. My brain's all systems. How do we do this the most efficient? How do we replicate it? So then I said, how do I use my law degree? So I went in, and tax is something that you have a lot of authority with an attorney, as much authority as a CPA or an enrolled agent. And then tax season I did one of those and it was miserable. It was people working for the sake of saying they worked. It was the most inefficient, ridiculous thing ever. But it was also based on the fact that everyone's saying, hey, here, you have to do all my books. You have to do everything right now for my tax return. So it's saying, how do we do this 1 month at a time? So we came up with our monthly service saying, okay, we'll do it a month at a time. We'll put all this stuff together, run it like a business. And I went in, I was cold emailing, and I got a hit from I found it easier to find Keller Williams agents, email addresses. And I went in and I had this conversation with the guy, and he said, you know what? What you're saying sounds an awful lot like what's said in this red book around here. And he pulls off the MREA, he staples his business card to it, and he hands me a copy. And I went and read it, and it was the same message I was saying, but with a real estate specific focus. And I had already said I'm going to focus on real estate, totally just random. So it was this sort of perfect alignment. And once I did that, and now I could talk about what my sort of concepts with specificity to some of the stuff that they were hearing from the sort of broader company, and provide sort of clarity to some of what that stuff meant. They're hearing you should do this, and it was like, what does that even mean? And I could come in and provide clarity. So then it went to teaching a lot of classes. You know, there's a lot of, you know, that's so education focused that it got me in front of people. And sort of, as they say, the rest is history. You know, from there, it was just every day saying, how do we best educate real estate agents? And as my staff can attest, as clients can attest, I'm not afraid to come in. You know, it looks like a typical Monday to everybody and go, we're doing things 100% different than we were before. Let's tear it all down. And it will freak people out, you know. Fortunately, you know, like Ashley, who I just referenced, has seen it enough that she goes, okay, I can believe in your vision of what you see, and that we'll get there. But it's every day asking the question, how do we do this better? How do we get through better? And, you know, not being afraid to make those changes, kind of consequences be darned.
Perfect. Well, thank you again. For everybody else, you know, there's a few people that came in later. This will be, video of this will be put online later on, so you'll be able to review it all. Reuben, thanks so much. Have yourself a great day and stay safe.